Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of cannabis stocks. And so in this video, I will be going over Tilray Brands, ticker symbol TLRY, as well as Sundial, ticker symbol SNDL, and Canopy Growth Corporation, ticker symbol CGC. I'm going to be skipping a couple of the other stocks as well as the ETFs, just so this video is a little more efficient and succinct. But before I do get into the charts, I did want to flip over to the Office of Public Affairs of the U.S. Department of Justice, their website, because it does look like there is some news. And so the news is this press release, which came out on May 16th, so on Thursday of this past week, that the Justice Department submits proposed regulation to reschedule marijuana. And so this is just a proposal. It is not the news yet. I do think that when it finally becomes scheduled as a Schedule 3 drug, it's possible that will be a sell the news event, but I did just want to go over this so we are aware. I do still think it is by the rumor time, but I do think that there will also be a lot of other bullish things going on with cannabis this year, so something to consider with the election and whatnot. I do think some states will be legalizing it, and I do think that will be good for the sector broadly. But anyways, here getting into this article, the proposed rule seeks to move marijuana from Schedule 1 to Schedule 3, emphasizing its currently accepted medical use in treatment in the United States. And so the Justice Department today, on May 16th, said that the Attorney General has submitted to the Federal Register a notice of proposed rulemaking, initiating a formal rulemaking process to consider moving marijuana from a Schedule 1 to Schedule 3 drug under the Controlled Substances Act, or CSA. And so I will include a link to this press release that also does have some other information here, pretty lengthy PDFs. But if you do want to learn more, you can check that out. But really, what I take away from it is that there is just another step being made moving forward, but we still don't have the news. So I do think that that will be big when it happens. And it's just, a slow process. But anyways, getting into the charts here, looking at Canopy Growth Corporation, ticker symbol CGC, which closed on Friday, May 17th at a price of $10.85, being down a little more than 1% on the day. And of these three tickers, I feel like the CGC chart looks the most interesting. It's had some reoccurring patterns that I think are pretty cool. I do want to go over those with you guys. And so really these patterns are just based on Fibonacci retracements. And so I have done this red one going from the low of 275 up to this high here at a price of $11.57. And from that retracement, we can see the 618 at $6.12 was a great dip buying opportunity here on this pullback. And then from that, we can look at this Fibonacci retracement in orange, and the extension of that, the 1618 extension, is at $14.96, which almost perfectly predicted the top here at $14.92. So pretty cool there. And also with this, we do see higher highs formed, whereas with the RSI, we see lower highs formed. And so that is bearish divergence, so it's not too surprising that we did see this pullback here. And so this pullback was roughly predicted based on this Fibonacci retracement here in yellow, coming down to the 618 or 65% level. That range right there is the golden pocket, and price did return to that level, similar to how it did over here, returning to the 618. And now price is rallying. And so from this white retracement, we can see that the 50% level here is at $11.84, which was the approximate high on Thursday, May 16th, having hit a high of $11.95. So I'm wondering if price will be continuing higher or if it might be pulling back to the 236 here. That is at a price of $10.21. And the reason why I think it might be pulling back to that level is because we do have all of this consolidation here. I do think that will be acting as support if we do get a pullback. Also, this level does seem to correspond approximately with the high over here, so I do think there will be some resistance at that level as we do see it. But if we are able to get closes above 1184 and specifically above the high from Thursday at 1195, I do think that would look really good for the stock. But I do feel like it's more likely it will be testing 1021, but I could be wrong about that. And one other thing that I do want to point out about this retracement, similar to this orange one here, where we looked at the 1618 extension to predict the next level up, we can do that here with the white one. And so that 1618 level would be bringing price to $18.73. So a pretty big move from current price. And so I'm curious if that will happen, if it will be repeating itself again, and that would be coinciding with this downtrend that I've drawn here based on these levels over here, this level of support that we saw in the past where we formed this kind of rough head and shoulders pattern and broke below it, then retested it over here. So that does seem to coincide pretty closely with this 1618. So I wonder if price will be going up there. But before I do switch over to the next ticker, there's one other thing that is super cool about this chart that I think you guys will like, and that is a measured move. And so if I take a measurement from the bottom here at $2.75 going up to the highs here, we can see that price went up around $9, give or take, just approximate there. But so from that measurement, we can move that over here to this low to get an idea of where price might go. And that is another pretty cool predictor for this level up here, the high that we hit. That is a measured move, beautifully carried out. So I just wanted to share that. And if I do apply that to the lows that we saw over here, maybe that will coincide with that Fibonacci extension, the 1618. Not exactly, but it does seem to correspond with that white downtrend. So maybe there's something there. Maybe that is where price will be going, and maybe testing $15 as support. So, I could see that as happening, and I just wanted to point out this measured move because I think it is super cool that it was able to predict this high after this pullback to the 618. But anyways, moving on to the next ticker here, looking at SNDL, ticker symbol SNDL, formerly known as Sundial. And so this one I feel like actually looks a little bit bearish, I'm sorry to say. And the reason for that is because we do have this wick high that was hit on Tuesday, getting up to $2.93. And that is a pretty massive wick. While it was a green day, not only gapping up, but the direction of trading from open to close was up, but it still looks like it closed approximately in the bottom quarter of trading for that day. So that could be a topping tail. And with this higher high here, we are looking at lower highs in the RSI. So that is bearish divergence. Also on Friday, we did put in a pretty massive bearish engulfing candle. It does look like it engulfed the 3 prior trading days, the candles at least, so not including the wicks, but it did encompass or engulf those 3 trading days, not completely filling this gap here to the downside. And so that would be coming down to a price of $2.40. That was the close on Monday. So maybe that gap will be filled. And that does seem likely, as we did close below the 382 at a price of $2.48, closing at $2.46, being down about 7% on the day, Friday, May 17th. So I could see this continuing down to test the 50% level at $2.34, and I would hope that would be the extent of the pullback. As with CGC, we did get the bearish divergence, but we didn't get a massive pullback to the lows, to the full retracement. We only saw it to the 65% level. And so I guess I should note that while I have the 50% level here, if there is to be a retracement to the 618 or the 65% level, so that golden pocket there, that would be bringing price down to around 216 to 220. So do look for that if we are not able to reclaim the 236 up here at $2.65. But really the big issue here is that we have this big wick to the upside, and in order to suggest that price would be continuing higher, we would need to see a close above 293, and that does seem pretty far away from the current price, so do keep that in mind. And then finally, switching over to Tilray brands, ticker symbol TLRY. Here we did close on Friday, May 17th at a price of $1.98, being down 6.6% on the day. And so here, this one actually looks the weakest out of all of these three, but perhaps that is a sign that this one has the most upside potential if the other two are overextended, let's say, or putting in bearish divergence. We do not see that here with Tilray, as the high that we recently saw on April 30th, following a 39.55% move on the day. That high is actually a lower high, and we do see a lower high in the RSI, so no bearish divergence or hidden bearish divergence there. But it is a pretty tough one to assess. I had really just been thinking that 170 was the floor, this yellow line, and we have struggled on this move up to be making higher highs than what we hit on the 30th. And so what we do have here is retracing to the golden pocket here, ranging from $1.95 to $1.98, testing that here and then bouncing up, but getting rejected from the 236 at $2.31. So if we are to break below the 65% level, I could definitely see us going to the 786 at a price of $1.83.5. But I do think that a sign of us breaking to that level would be getting a close below the low here hit on May 9th. And so that low was at a price of $1.91. So, we're 7 cents away from that. So hopefully we don't get a close below it. If we do wick below it but close above, that could just be a dip buying opportunity before we do see a rally to test the 236 again, hopefully get above it, hold it as support, and then break higher than the high hit on the 30th, which was at a price of $2.51.5, corresponding pretty nicely with this golden pocket here from this retracement on the way down. So do keep that in mind. But yeah, of these three, I would say I am most bullish on CGC, kind of neutral with Tilray, kind of curious to see what would happen. And with SNDL, I'd have to say I'm unfortunately a little bit bearish on this one. I do think it needs to reclaim and convincingly hold one of these levels, and that might be the 50% level at $2.34. So that is what I would look for. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. Take care.